Hey everyone, welcome back to TechMoneyAI. Today we're diving into an exciting topic, how to use AI tools to predict stock market trends. If you've ever wondered how artificial intelligence can help you make better investment decisions, you're in the right place. So let's get started. Artificial intelligence, or AI, is transforming the world of investing. It can analyze vast amounts of data much faster than any human could. But how exactly can AI help us predict stock market trends? In this video, we will explore some powerful AI tools and techniques you can use to spot trends before they happen. Whether you're a beginner or a seasoned investor, understanding these tools can help you make informed decisions about your investments. First, let's talk about what we mean by stock market trends. A trend is the general direction in which the market or a specific stock is moving. Trends can be upward, downward, or sideways. Upward. Trend. This means prices are generally increasing over time. Downward trend. This indicates prices are falling. Sideways trend. This occurs when prices are moving horizontally with no significant increase or decrease. Identifying these trends is crucial for making profitable investment decisions. But how can AI assist in this process? Now, let's look at some key AI tools you can use to predict stock market trends. Here are a few popular ones. Yahoo Finance. This platform uses AI to analyze stock trends and offers insights based on historical data. You can view charts, read news articles, and see predictions based on current market conditions. Google Finance. Like Yahoo Finance, Google Finance provides real-time stock updates. Its AI capabilities help analyze trends based on various market factors, allowing you to spot potential upward or downward movements. Trade Ideas. This advanced tool uses AI to scan thousands of stocks for trading opportunities. It identifies patterns and generates alerts when it detects significant movements, helping you act quickly. Kensho. Kensho is used by financial institutions to analyze historical data and identify correlations in the stock market. It uses natural language processing to summarize data and provide insights. Sentifi. This tool analyzes social media and news sentiment to provide insights into stock market trends. It uses AI to gauge public sentiment about companies and sectors, giving you a broader view of market influences. These tools are designed to make it easier for you to understand the market and make informed decisions based on data rather than emotions. If you're finding this information helpful, don't forget to hit that subscribe button and turn on notifications for TechMoneyAI. Stay updated on the latest insights and tips to help you invest better with the power of AI. Okay, let's talk about how to analyze data using AI. Understanding how to interpret the data you gather is crucial in predicting stock trends. Data collection AI tools collect data from various sources, including historical stock prices, financial news, and economic indicators. This data is essential for making accurate predictions. Pattern recognition. AI uses algorithms to identify patterns in the data. For example, it can spot recurring trends, such as a stock's performance during specific market conditions. Predictive analysis. Once patterns are recognized, AI can predict future price movements based on historical data. This is where AI really shines, analyzing vast data sets to forecast potential trends. Real-time analysis. AI can process data in real time, allowing you to react quickly to market changes. This is crucial in a fast-moving market where prices can fluctuate dramatically. Let's discuss some practical steps to use AI tools effectively for predicting stock market trends. Choose the right tool. Select an AI tool that fits your needs. For beginners, platforms like Yahoo Finance or Google Finance are great starting points. Set up alerts. Most AI tools allow you to set up alerts for specific stocks. This way, you'll be notified when there's significant activity or when a stock hits your target price. Analyze historical data. Spend time analyzing historical data to understand how stocks have performed under different market conditions. This knowledge will help you make better predictions. Monitor market sentiment. Use tools like Sentifi to gauge public sentiment about stocks. Understanding how people feel about a company can influence its stock price. Backtest your strategies. If you're using a more advanced tool like Trade Ideas, take advantage of backtesting. This lets you see how your predictions would have performed in the past, helping you refine your strategies. If you're enjoying this content and want to learn more about using AI in your investments, make sure to subscribe to TechMoneyAI. We're here to empower you to invest better with the power of AI. As we wrap up, remember that using AI tools to predict stock market trends can be incredibly beneficial. They offer valuable insights, help you make data-driven decisions, and can save you time. However, always use these tools as part of a broader investment strategy. It's essential to combine AI insights with your research and intuition. The stock market can be unpredictable, and no tool is foolproof. By leveraging AI, you can stay ahead of the curve and make smarter investment choices. Thank you for joining me today. I hope you found these tips helpful and that you're excited to start using AI tools for your trading strategies. Let me know in the comments if you have any questions or if there's a specific tool you'd like to learn more about. And remember, invest better with the power of AI, subscribe to TechMoneyAI, and hit that notification bell. See you in the next video.